All right, I got a good one for you. You ready? Interest rates are high. I know that. We know that. We can't do anything about it right now. It is what it is. So we got to work with what we got. I had my client, went under contract. I said, hey, rates are going up. I'm just letting you know, yada, yada, yada. Went over the pros and cons of buying down a little bit, a lot, not buying down at all that good stuff. Literally, the difference of buying down was like $100, or the other option was like $220 per month in savings, which is a good little chunk of change. Like, I'm not hating on 100 or 200 and something dollars. Like, that's a good little chunk of change. But the cost of the payment difference was substantial, to where if you were to buy it down, it would take like 3 years to recoup that money. And the rates are projected to go down well within the next 3 years. So it's probably not going to make sense for them to buy it down quite that much. And here's the thing that people don't understand, which I get because, again, nobody teaches us this, that the cost of buying down your rate is dependent on a handful of things, let's say. Obviously, your credit score, what type of loan you're going with, how is the property categorized, your down payment, but also your loan amount. Not your purchase price, your loan amount. I'm going to give you an example. You have a loan amount of $300,000 and your brother has a loan amount of $400,000. And you guys, literally everything else is the same. Your debt to income, your credit score, all of that's the same, okay? The cost to buy down on a $300,000 home is less expensive than a $400,000 loan, because 1 point equates to 1% of the loan amount. Therefore, if you wanted to buy 1 point on your $300,000 home, it would cost $3,000. And your brother that has a $400,000 loan is going to pay $4,000 to pay for 1 point. So keep this in mind when you are purchasing a home, especially if there are points attached to it, that 1 point equates to 1% of your loan amount. So your closing costs could go up drastically if you're purchasing, let's say, a home with a $600,000 loan. 1 point automatically right now is going to be $6,000. And more than likely, it's probably not worth paying that, depending on a number of things. So make sure before you just jump into getting the lowest interest rate that you have a loan officer that's fully going to walk you through a cost analysis to see what makes the most sense for you in your situation.